Home loans. Buying a home is a dream of many people, and the first step is usually getting a loan. A home loan is essentially a loan to assist you in purchasing a home. There are many different options in this area, and what is suitable for one person may not be suitable for another. In assessing whether a home loan application will be successful or not, a financial institution will take into account a number of factors, including your income, your living expenses, your employment history, any assets you own, and any liabilities which you're responsible for. There are three basic types of home loan, and these include a variable home loan, which essentially has an interest rate that changes over time as the Reserve Bank of Australia raises or lowers interest rates. The second type is a fixed rate home loan. This is where the interest rate on the loan is fixed for a period of time. Or thirdly, there's what we refer to as a split loan, which really is essentially a combination of a fixed and variable loan. One of the essential ingredients of owning your home is to have a deposit. A deposit is essentially a sum of money which you have saved to contribute to the purchase. The higher the deposit you have saved, the smaller the loan. One of the nasty expenses that many people forget is mortgage insurance. This typically needs to be paid on a loan if you are borrowing more than 80% of the value of a house. Now, don't be fooled by the term insurance, as all mortgage insurance does is protect the bank in the event that you can't pay the loan back. The insurer pays the bank, and then the insurer will chase you for the outstanding monies. This can be a costly expense, as shown in the table. Unfortunately, buying a house is not cheap, and in addition to the purchase price, you are likely to incur a number of costs, including bank fees, mortgage insurance, application fees, monthly service fees, government fees such as stamp duty, and other fees such as a building report or conveyancing fees. It is wise to budget 5 to 7% on top of the purchase price of the house to cover these fees and charges. Determining where you go for a home loan is an important decision. As a general rule, most people go to credit unions, building societies, banks, finance companies or mortgage brokers. A more important factor, however, than the lender are the rates and terms of the loan. You may even find that a mortgage broker can help you source the best loan. Your obligations under a home loan are essentially to pay back the principal, pay the interest which you've agreed to and which may vary from time to time, and remain on the payment schedule as outlined by the bank. Unfortunately, whenever you borrow money, you will pay interest on it. The higher the interest rate, the more you pay. When borrowing money, one trap to avoid is to let your interest accumulate in addition to the original sum being borrowed, as this can be financially crippling. Interest rates are set usually according to the Reserve Bank of Australia cash rate. The banks usually take this rate and add approximately 1.5 to 3% on top of this, and this is the rate which they use for their mortgages. Different banks have different rates, and these change frequently, so it pays to shop around. The process for buying a home usually involves firstly obtaining home loan pre-approval. Until you know what you can afford, you can't really look for a house. Pre-approval gives you an idea of your borrowing potential. Then you need to find a house. Once you've found the house, you then need to have the contract checked out by professionals such as a lawyer. Once you're satisfied with the contract, you then usually sign the contract and make this contract potentially subject to a number of conditions, such as your ability to obtain finance. Once you've signed the contract, you need to satisfy the conditions of the contract, such as obtaining formal home loan approval. Once this has occurred, the conveyancing process starts, and this really is a process of taking your purchase through to settlement, and it usually requires a professional conveyancer or solicitor to assist you. At the end of that period, which is usually 30 or 60 days, this is when the seller receives their money and the property becomes yours. If you need more information, please contact one of the websites listed. And remember, buying a house is one of the biggest expenses you're likely to make. So take your time, seek advice, and do your research, as no one will look after your interests like you. Good luck.